Welcome to another Senior Center Show production. I'm your host, David Swanson. Age in Place, Reverse Mortgages Explained in Simple Terms. Brought to you by Mortgage Solutions, where we have the reverse solution. And also, my partners in living. Let's age gracefully together. In-home health care. What is a reverse mortgage? A reverse mortgage are loans that allow homeowners aged 62 or older to convert their current equity into ready cash. How does it differ from a regular mortgage, or what we like to refer to as a forward mortgage? First, there are no monthly mortgage payments for the rest of your life, no income qualifications, and there's no credit requirements of any kind. Good credit or bad credit, you still can get a reverse mortgage. Let's take a look at the reverse mortgage qualifications. You have to be a homeowner and you must be 62 years or older. Homes must be a 1 to 4 family residence. Condominiums and planned unit developments are okay. Any and all existing loans, mortgages, liens against the property must be paid off at the time the reverse mortgage goes in place. The reverse mortgage will pay them off at the closing. And you also need to go get mandatory counseling by HUD. This is required to make sure that the senior knows what they're getting involved in when they take out a reverse mortgage. It's a good thing. How a reverse mortgage works. First off, it's based on 3 factors. The age of the homeowners. The older you are, the more money you receive. The value and the equity in the home. The more equity you have, and the higher the value of your home, up to $625,000, the more money you receive. And the current interest rates. The lower the interest rates, the more money you receive. Once again, it's based on age of the homeowners, the value of the home and the equity that you have in that home, and also the current interest rates. A reverse mortgage does not require repayment until the borrower moves out permanently, which means more than 1 year, the borrower sells the property and moves on to their next home, or unfortunately if the borrower passes away. What are the borrower's responsibilities? Number 1, you always in any mortgage must keep your property taxes current. That is the same in a reverse mortgage. You always must maintain current homeowners insurance. And the last thing is your responsibility, and again with any mortgage, is you are to maintain the property in good condition. This does not mean a new kitchen. It does not mean a new bathroom. It simply means keep the house in good condition. What are your flexible payout options? The first payout option is called the tenure option. What that is it's like annuitizing your home. Every month you will get a payment for the rest of your life for as long as you live in the home. It's a great feature if you just want a little extra income every month. That's called the tenure option. The next option is the lump sum. I'd like a lump sum to pay off an existing mortgage. I'd like a lump sum to buy a bass boat. Or I'd like a lump sum to buy a new car. Or how about both, pay off a mortgage and buy a new car. The next one is a line of credit. The line of credit is a very unique product. Different from the traditional home line of credits is that it has a line that increases each year on what you don't use. Let me explain. If you have a $100,000 line of credit with a reverse mortgage that you don't use this year, and it has a growth rate of 4%, next year that line of credit will be worth $104,000 to you. That's pretty slick. No traditional home line of credit has such a feature. And the last thing you can do is you can use a combination of all of these. You could get a little monthly payment once a month. You could take a lump sum out to pay your existing mortgage. And then the last thing is to leave a line of credit just in case those unforeseen things come up that you may need a little bit of money for. What are some of the common misconceptions about a reverse mortgage? The lender is going to take my home and now owns my home. This is not true. Home ownership remains yours. A reverse mortgage is simply a lien against the property like any other mortgage. You remain the owner. What are other common misconceptions? I can be thrown out of my home once I use up all the money. Not true. The homeowner stays until the loan matures, which is either the borrower moves out, sells the property, or unfortunately passes away. Common misconceptions continued. I can owe more than my home is worth. This is a myth. The homeowner can never owe more than the value of their home because of non-recourse. Another misconception. I won't qualify because I have bad credit. I have low income. I'm currently in foreclosure. No one will give me a mortgage. I've had a bankruptcy in the past. There are no credit or income qualifications to get a reverse mortgage. Another misconception. Monthly payments are required on all mortgages. Surely a reverse mortgage has a repayment requirement. No, there are no monthly mortgage payments when it comes to a reverse mortgage. I won't be able to leave any inheritance to my heirs. Experience demonstrates that heirs are in favor of a reverse mortgage when it improves the quality of their parents' life. The government is expecting that house values will outpace the loan balance for a reverse mortgage. What are some uses for reverse mortgages? Home health care costs, repay existing mortgages, reducing the burden on their children, using it to repair or improve their home. Many reverse mortgage candidates use their reverse mortgage to pay property taxes annually and also pay homeowners insurance, travel, expenses, and some give it as gifts. This was published per the AARP. Home Equity Conversion Mortgage, also known as the HECM. That is the HUD FHA Reverse Mortgage Program. How safe is an FHA reverse mortgage? FHA and HUD administers the HECM program and guarantees that borrowers receive their requested loan advances even in the case of lender default. They do this through the FHA mortgage insurance premium. FHA and HUD really want seniors to stay in their own homes, and that's why they provide the HECM program. The market today consists of only one product, the FHA HUD insured HECM program. The current lending limit is $625,000. What the lending limit means is if your house is worth under $625,000, then it will be based on your value of your current home. If your house is worth more than $625,000, then HUD will say that your house is worth $625,000 for their lending purposes, hence the name lending limit. Another thing that makes the reverse mortgage a safe bet is called the non-recourse feature. It's a very good financial tool because it protects the rest of your estate. The non-recourse means that the mortgage is simply against the house and not against the individual or their estate. Your heirs will never owe more than the house is worth. That's what makes this a very unique product. Most mortgages are against the person as well as the property. In this case, it's only against the property. If you owed more money at the end of the term, you would not be liable and nor would your heirs. I have a question for all of you. When you retire, how many of you are counting on, let's say, a friend, a relative, or even your children giving you or lending you $1,200 per month? Or how about they say, tell you what, we'll just put a lien against your property for $170,000. They're going to wait for their money. They may wait 10, 20, or 30 years because they're only going to get their money back upon the sale of the home. Also, they have to understand that you're retired and you're living on a fixed income, so you can't pay them any payments. I don't have too many friends or relatives that are going to be doing that for me, but we both have the federal government and the HECM program to look forward to, and they will step up and do this for you. Let's take a look at the typical retirement assets, specifically non-liquid and liquid. Non-liquid assets are the house. Liquid are cash, IRAs, 401k, pensions, stocks, bonds. If you take into consideration if you typically require on your cash, your Social Security, your IRA, your 401k, your stocks, bonds, that would be considered your nest egg. Never have we looked at our house as part of our nest egg, but when we do, we include that into that nest egg. The nest egg is a lot bigger. But take out the reverse mortgage as a financial planning tool for retirement, and your nest egg will be a lot smaller. So let's add up the benefits. Home ownership or title stays in your name. You satisfy all your financial needs at this time. And most importantly, it allows you to live dignified and also independent. And you remain queen or king of your own castle by getting a reverse mortgage. Alright then, you've paid for your home. Now let your home pay for you. On behalf of Mortgage Solutions, where we have the reverse solution, located at 14 Church Street, North Haven, Connecticut. Also on the web, www.msimortgage.com, or give us a call for more information, 203-985-4444. Thank you very much for your time.